Hi, I'm Eric Zontrub. I'm the chair of the board of directors of Critical Elements Lithium Corporation, ticker CRE on the TSX Venture Exchange. We intend to develop the high-purity rose lithium tantalum mine and concentrator in the James Bay region of Quebec.
Good to see you, Eric. Thanks for joining us for this little series that we're doing for Beginner's Guide to Lithium. What we're going to do is we're going to sort of break down and simplify for a new audience, a little Gen Z group of investors joining us from the world of tech, who perhaps don't know as much as some of the more experienced or investors in mining, and we're going to hopefully help them make lithium just a little bit more accessible by dint of understanding the macro supply-demand stories. But first, we're going to kick off with a little bit about you. We spoke in January. It was all about permits. It was all about the timelines to be able to get the permits that you need to move things forward. You have raised a little bit of money since we last spoke, but give us a quick update.
Yes, we put out a news release on February 17th that gave a bit of an update on what's happening with the Rose project. First of all, we have hired the engineering firms that we need to do the front-end engineering design that moves forward phase one of the Rose project in northern Quebec. Phase one is the mine and concentrator. The engineering firms are Bumigem, which is a well-known Quebec engineering firm that's designed and built numerous projects around the world. WSP is doing the infrastructure work, and Golder, a very, very highly regarded group, is doing the tailings, looking at that for us. So this comes on the end of the November 2017 feasibility study for phase one. And so with that feed, with that front-end engineering design work, we can swing right into incorporating new data to provide an updated feasibility study. That updated feasibility study will revisit CapEx, operating costs, and pricing of spodumene concentrate. These are our key inputs. And if you look at, for example, in the 2017 feasibility study, a 20% increase in capital cost translates to an 8% decrease in the NPV of the project after tax, whereas a 20% increase in pricing, and we used $750 per ton for 5% concentrate, a 20% increase corresponds to a 41% increase in that NPV. So you can see the project is not very leveraged to CapEx, but is highly leveraged to metal prices. Right now, we've seen a massive increase in lithium spodumene concentrate pricing. We've seen prices as high as $2,500, $2,800 per ton on a spot basis. That's not exactly reflective of contract prices that one sees, and feasibility studies that are coming out very recently range in price from about $1,000 per ton to about $1,300 per ton. So you can expect pricing in that sort of a range.
So you're at the sort of the last few years, you're in the home straight, as it were. But I'll keep coming back to the fact that, I think the team is a good team. The asset is a big asset. The numbers look good, but you need, and people expect to see you get these permits. That's the kind of long pole in the tent. So is there any update on that?
Sure. As followers of the company, investors in the company know, we received our federal permits in August 2021. The Quebec permitting process is a parallel process that's done independently. The Quebec process has no legislated timeline, and so what one normally sees is 4 or 5 rounds of questions and answers as the committee members meet and pose questions to the company to respond to. It's normal to have 4 or 5 rounds. We have now completed 5 rounds. As we noted in our recent news release, we've had no further questions, and so we are very confident that over the next few weeks that we will conclude this process in a positive way.
Right, and what does that? And no promises to get it, but what does that release for you? I'm imagining, because you've talked in the past about strategic partners. You've obviously got to get this thing funded. So just tell us about what the roadmap looks like once you get that permit.
First of all, let's talk a little bit about valuation. Right now, the stock, well, pre the Ukraine invasion, the stock was trading at around 0.3 times NAV. And that's relative to the net asset value as put out in the 2017 feasibility study. That's a significant discount to, if you look at the average for coverage at Canaccord Genuity and their global coverage of lithium stocks, the average was around 0.7, 0.72 times NAV. So that's a significant discount just on phase one. So that's the mine and concentrator. And to be conservative, we have always said, let's build the mine and concentrator first. And then a second phase could be a conversion plant in Quebec that takes the concentrate and gives us the lithium hydroxide that battery manufacturers are looking at. So that too is an engineering study that is expected in the near term. That engineering study will introduce new economics and have an impact on where the stock is trading. So a re-rating based on that. Coming back to permitting, permitting is an essential milestone for us. And we believe that there is a potential re-rating, a significant one, attached to receiving that Quebec permit. And so what does that mean for financing and strategic investment? And as we've said in our previous visits with you, Matt, we require investment in parallel with offtake. And so rather than signing an MOU, and we've discussed MOUs in the past with an unmentionable party, we are looking to align the interest of the offtaker with the interests of the investor. And so we want to see a strategic investor in the company coming in first, and that will then begin the dominoes cascading for other parts of the financing. We're looking for something on the order of 425 million Canadian. That's a number that will be updated in the updated feasibility study, but as a estimate at this point in time, we look to see that come from different places. If you strategic equity investment from the street, private sources of debt funding, and then, of course, Quebec Inc. has already stated its extreme support for the battery materials space, setting aside $1.9 billion Canadian for that. So we're quite excited about all the catalysts that are coming here over the next short while.
Okay, and one more question. I promise for the kind of new to mining people, the beginner's guide bit. Coming up shortly, just stick with us just a few more minutes, because you said something that interests me there. You mentioned the Ukraine-Russian situation. So you referenced obviously the multiples that you were getting and versus the re-rate that you think you'll possibly get if things move forward. What effect does something like Russia and Ukraine, the conflict there, do for the markets? What does it do for the commodities sector? What does it do specifically for your commodity, and then maybe the impact on your company? How do you think that trickle down of those ripples will affect you?
Well, let me start with the tail end of your line of questioning there. What does it do for our company? Obviously, like all companies in the space, we're seeing the markets trading off today. This is the invasion is less than 12 hours old, so risk is off the table, and so you're looking at most equities being off dramatically today. We were sitting in November looking at the landscape of risk, and the board decided that we didn't have enough capital. We were concerned, and we literally said we were concerned about the potential for another variant of COVID-19, and we were concerned about war in Ukraine. So tragically, both those things have occurred. We're very pleased that we were able to raise $30 million Canadian, and we are, I wouldn't say we're bulletproof, but we are in a good position to go through the next year or two, come what may. And that's essential when you look at all the companies in the space, that they have capital and they're not stuck on fumes having to raise in a negative environment like this.
But just sorry to interrupt you, because I think it's important. You raised at 175, right? So the people that kind of came in at that price point, I don't know what the makeup was in terms of institutional, retail, or otherwise. What's your message to them? Because if you said at 125 today, is that just a factor of Russia, Ukraine? Is it just a factor of more broadly its risk off at the moment?
Well, I think the stock settled into sort of the 130 to 140 range as post the financing. Obviously, we had people playing the unit, selling common and running with the half warrant. It's unfortunate, but that's unfortunately the way these deals work in this environment. I'm a shareholder myself, so I'd much rather see the stock at $1.90 than $1.30, but there it is. The recent drop that takes it into the 120s on the Ukraine situation is very consistent with what everybody else is doing in the space right now. So it's tragic, but we're going to have to see how this Ukrainian situation plays out. How long it takes and what the consequences are depends on which echo chamber you're listening to. But certainly it's going to be messy for a while. In the meantime, we're just going to continue to move forward. We hope to have the permit near term. We hope to have the conclusion of discussions that have gone for a long time on strategic investment. We're going to build an owner's team. We're going to conduct exploration. There are a lot of positive catalysts that are coming in the stock. Whether the market is receptive to them or not, we'll see. That's a macro situation.
Okay, and talking macro situations, now might be the time just to refresh our memory of what the numbers, supply demand numbers are out there, to introduce some of the concepts around the thesis for people new to investing in mining and lithium specifically today. Should we start with that? Should we start with the demand side first? Would that be a good place?
Certainly.
Okay.
Certainly.
Now, we said that we might share a screen.
Indeed.
So let us do that, because it'll give us some great talking points.
So the key to lithium is understanding where's demand coming from. So if you look at the slide here, you can see the plug-in hybrids in blue, and the green is the battery electric vehicles. So combined, we're looking at approximately 6.4 million units globally sold to the consumer. And you can see that this is almost double of what we saw in 2020. So whether you're talking about consumers loving the idea of electric vehicles, or we're looking at government incentives in order to reduce the carbon footprint on transportation, on mobility. Regardless, we're looking at a massive growth in EV sales. And the result is that the OEMs, the car manufacturers, is that they're massively expanding their lines, their brands of vehicles that are going out to the consumer, to the point where they're investing tens of billions of dollars in order to switch over their plants. And the thing that people don't talk about is that the economics for a car manufacturer are so much better. Fewer moving parts, fewer workers in the plant, much lower warranty costs. And so there's a real incentive for the OEMs to go in this direction. So with this massive growth in demand for lithium, you have to have a comparable growth in cell manufacturing. So you're seeing battery gigafactories popping up all over the world, more so in Asia than we've seen in Europe and North America. But Europe in particular is working on investing heavily in that space, and North America behind it. So consequently, that lithium demand is rising to go into these new batteries, to go into these new cars. And it's hard because there's this impression that you can snap your fingers and have a brand new lithium mine in 3 or 4 years, because after all, it only takes 2 or 3 years to convert a manufacturing line and build a battery plant. But it's just not the case. It takes years to build a mine. First of all, discover it. Secondly, build the mine, build the processing plant if you're talking about a direct lithium extraction plant. And then it takes 18 to 24 months to qualify that lithium for use in the battery. This is not copper or gold. This is a very finicky specialty chemical process and industry. And so if you look at it, you come back and down in the bottom left, you can see pricing. This is the benchmark lithium price index that reflects realized prices happening in the spot market. And you can see that since the low in September 2020, that lithium pricing is up as much as 400%, and it's actually grown since that. So there's a massive impact, not just in the demand, but the rebuilding of inventories that have to go into these plants.
Do you think then that, sorry, this is a more holistic conversation, and I'm very conscious that we should make it, specifically about lithium where we can, but you're indicating the key driver for lithium is the electric vehicle revolution. The fact that the numbers are growing quicker than anyone had forecast. That it's not just in terms of the OEMs, the automotive manufacturers, but also the miners take a long time to actually get to the point where they can throw something out, put something out at the other end, right? So, and in many ways, the automotive manufacturers seem to be reliant on being able, or have been up until now, reliant on being able to buy the commodities in the spot market, or in the market. With the kind of demands heading the way they are, do you think that it's going to move more towards a contract situation? They are going to want to nail down their supply chain for long periods of time, well ahead of time. Is that the way this is going?
Well, by far, the majority of lithium units are transacted on a contract basis rather than a spot basis. And some of the producers have started sort of an auction process. If you look at Pilbara, for example, they've done a great job, and they're capturing some of their pricing on that basis at a much higher level. But the reality is that the OEMs, the battery manufacturers, need to start locking in offtake. And so we're seeing a really intense battle to try and grab that offtake. It's not so hard to do an MOU, as we've discussed in the past. MOUs might not be worth the paper they're written on, but it is an element of the business. The OEMs in Europe and North America, one could argue, have been a bit slower off the starting line. OEMs in Asia have been very aggressive in trying to lock down that offtake. Some of these OEMs are still oblivious and aren't quite aggressive enough. What's interesting is the reliance that we're seeing, largely because of, I wouldn't call it greenwashing, but there's an honest desire to reduce carbon footprint, to reduce water use, to reduce the impact on communities. And so there are these beautiful, elegant ideas that have come forth. Recycling, obviously, we need to see a lot of lithium in the system, a lot of batteries manufactured before recycling becomes commercially impactful. But there are other things like direct lithium extraction, for example, from geothermal brines, from wellfield brines. These are beautiful solutions. But again, it's going to take a while, a lot longer than people think, to see these things actually at a commercial level. So consequently, there's an important gap there where conventional mine and brine is going to have to fill in the gap until we get those units that we desperately need from those other technologies.
So that graph looks terrifying. If you are an OEM or battery manufacturer, because what's the other side of the coin, which is the supply side, which is there are a lot of companies claiming the ability to get into production. There are a lot of companies who don't have the money to advance their projects yet. But are hoping if the prices reach a certain level that they might be able to get that money. There are also lots of people out there with assets which just aren't capable of getting into production, with teams not capable of getting it into production. So what people are claiming in the market versus the reality of how many of those will successfully get into production, of whether it be a spodumene or a hydroxide, is problematic. What are your thoughts on that? I mean, first of all, what's your view on the supply chain as it sits at the moment?
Well, I'm going to agree with you, and I'm going to suggest to you that this sort of a checklist approach approach is something that I've done in the past as a mining analyst for literally decades. Scary thought. But to me, it's always comes down to the 4 Ps: the people, the place, the project, and price. In other words, valuation. And you need to have as many of these boxes ticked to consider it as a viable investment. And people, I mean, we as a geologist myself, I love it when the geological team comes in with a new discovery and says, yep, we're going to build a lithium mine. But there is no experience from the lithium industry on that board or in that management. In terms of place, you want to be in a top tier mining jurisdiction. If you're an OEM building a diverse supply chain, you want to have as much as possible of your supply coming from top tier jurisdictions. Where there are indigenous peoples, you need to have formalized relationships with the indigenous peoples. Otherwise, it's not going to work. And then you also have to have infrastructure. So if you're hundreds of kilometers away from the nearest dirt road, or hundreds of kilometers away from the nearest port without rail in between, it's a big ask to see those lithium units make it to the market in a reasonable amount of time. In terms of the project, obviously, the better the project, the better it is for the investment. And so you want to have attractive metallurgy, you want to have size, the environmental attributes are important, and permitting. Permitting is essential. You want to be in a top jurisdiction where permitting is doable and where you're not going to get your permits taken away. Look at what's happened to Rio Tinto in Serbia. Nationalization potentially in Chile, nationalization in Mexico being threatened. You want to be in a top tier jurisdiction. And then finally, in terms of valuation, there are some people that are better promoters than others, and it's important to be able to do good promotion, don't get me wrong. But if you're promoting and telling people you're going to be in production in X months, and that's not realistic, that's not good for the company, it's not good for your investment, it's not good for our industry.
That's a great, the 4 Ps, nice checklist there. And is that you ranking yourself there? I'm trying to work out what the once an analyst, always an analyst. Yeah, it's. I think that those are good points for beginners looking at this. I think the more experienced may recognize a lot of the comments that you've made there, and there's a subtle difference between companies claiming they have these things and them actually having these things, and I think that is also one of the difficulties for people new to the mining investment, is working out who to believe, and I guess the person telling you needs as much diligence done on them as what they're saying. So I think that would add that to the mix completely. So right. So that's the kind of checklist on the supply side. So let's talk about numbers then. Is there any sort of sense as to what the market? We know what the market needs in terms of demand. There are lots of different technologies. We've got the kind of conventional brines that people may understand. We've got hard rock, which people may understand, and you've referenced direct lithium extraction in a couple of places, plus clays. So there's some slightly more technical, ways to extract lithium. So, in fact, what are you going to share with us here? This looks interesting.
This is the supply and demand outlook from my old shop, Canaccord Genuity. Reg Spencer, I'd say, is one of the leading analysts in the space. So I've blatantly stolen this from August 2021. I believe there's a recent update to this model, but this is a model from August 2021 and is therefore more conservative even than what's happened to the market recently. But if we're looking at this, can see that I've highlighted, we're looking at 1,044 kilotons, or 1 million tons of lithium carbonate equivalent total demand in 2025, and that rises to 2.6 million tons in 2030. I'm seeing numbers today that are closer to a 3 million ton estimate demand for 2030. So at the very bottom, you can see the size of the surplus or the deficit. The deficit is a negative number. And you can see that blue chart at the bottom, how total supply in around 2026 just the massive gap that's growing there, as much as 45% in this model. I know UBS, for example, published a supply gap of 50% by 2030. And that's going to require tens of billions of dollars invested in new production, regardless of whether it's mine, brine, or new technology. You need those new units in order to meet the demand that is expected from electric vehicles. We haven't really talked about some of the other demands, but there are batteries associated with grid stabilization. So in other words, if you have solar and wind generating electricity on a variable basis, you can store that energy in a grid battery facility, and there's significant lithium demand coming from that source as well.
Yeah, I mean that's a very interesting area in terms of we talked about different technologies emerging there, but lithium still has a place to play there for sure. Right. So what we're seeing is that there's a big delta between what we are currently know can be in production and what we know or we believe the demand will be. So therefore, what's going to happen? Does this mean that projects that are currently sub-economic will more readily find money because they're looking at this kind of hockey stick demand graph of yours? It suggests that as a banker, ex-banker, you're an ex-analyst, you would say, well, I feel a little bit more comfortable about investing in these projects, which at the current prices don't work because I know what's coming down the line. Or is that still just too much risk for the financiers of these big projects? Because they're big numbers.
Well, I think what we're all waiting for is for the OEMs and the battery manufacturers to recognize this gap on the horizon and free up some capital. The OEMs are relying on capital markets to provide funds to put these new projects into production. And I'm not going to talk about the specifics of critical elements, but as a general comment, I would suggest that Asian parties are looking closer at that horizon, recognizing the opportunity for them. And so there's a greater chance that you're going to see investment from that quarter coming into projects globally. We've already seen, for example, Neolithium taken out by a Chinese entity. We're going to see more competition like we've seen in the past for Millennial. And so more M&A, expect more M&A, expect more investments from that quarter. And let's hope that North American and European end users begin to realize that more and more of their lithium units that they need for their batteries are going to come via Asia than perhaps they'd like if they don't step up themselves.
Right, you're right. We've seen a few. We've seen people like Ganfeng step in and secure their supply for the future, and I agree with you. We'll probably see a bit more of that. If you're everyday investor, what's the opportunity here? Is it a case of we need all of the above, so all of the above will work, or are there some more likely to succeed than others? And if so, you've kind of given us a checklist, but is there anything else that we should be cognizant of before we place our bets, as it were?
Well, you and I have seen a few cycles, and as we know, the first mover is always the producer. I'm not implying you're old, I'm just saying. The first mover is always the producer, and then we come down the food chain or up the food chain, depending on what direction you're looking, where you get the smaller producers, and then you get the developers that are close to production. Then you see the explorers kick up. The leverage is always in the investment, the speculation, probably better put, that is the furthest from cash flow. And so if you're an investor or a speculator, and that's really where your head is at, then go for the thing that's the furthest out of the money, because it's going to move the furthest. It also has the highest risk associated with it. And as an analyst, I didn't play that game. For me, it was always about quality. Who's got the best people? Who's got the best project in the best place? And can I get it cheaply? Are there some catalysts coming up that will cause a re-rating? And that's always been my game as an analyst and my preferred route for investment. Besides, if the commodity doesn't provide a tailwind, if you're looking at a company that's going through a re-rating, a de-risking process, it's going to move. It won't move as far without the tailwind from the commodity, but it is still going to give you a great return. And if you consistently find stories like that, you're going to have a very attractive portfolio.
Right. So same rules apply for lithium as they do elsewhere. Further away they are from some kind of monetization event, high leverage, high returns if it works, but chance of success much lower. Nearer production, obviously lower leverage, lower type returns, but more certainty of returns, and that may make, depending on your risk profile, make it feel more comfortable. Or you go somewhere in the middle where it's been de-risked to some extent, but you feel that it will move forward to a production process. So it's similar. There are no kind of exceptions or kind of peculiarities or vagaries for the lithium market. It's fairly conventional in that sense.
Yeah, and that checklist I think is a useful tool for you as an investor. Make sure that all the P's are there.
Get your P's in line. Well,
Indeed.
Actually, there was a great marketer called Philip Kotler. He wrote a book many years ago, and he talked about, he had his 4 Ps as well, which I think people have extended onto. There must be about 9 Ps. So we have to see if we can add a few more Ps to your list. As ever, really informative. I appreciate your experience and knowledge coming to bear in terms of helping beginners understand the world of lithium as it stands today in terms of supply and demand, the macro picture. I hope people have been able to, hope they feel if they can access this space and feel comfortable in this space enough to maybe ask a few more questions about perhaps where they can invest, what they should be investing in. So appreciate your time today. We'll speak to you soon.
Always a pleasure. Thank you.